Welcome back to Talk Tickers. We love to break down these earnings calls, and today we're diving into TaskUs' Q3 2024 report.
Yeah, their stock ticker is TASK, in case you're trying to follow along.
Exactly. We got the transcript piping hot off the press, ready to go. And really what we're looking for is, those golden nuggets that you can use for your investing journey.
Absolutely.
And I think, one thing that really jumps out to me from just glancing through this is they're really thriving in a market where a lot of other companies are kind of struggling.
Totally. I mean, this earnings call really paints a picture of a company that's playing offense.
Yeah, they're not on defense at all. I mean, their revenue jumped to $255.3 million for Q3. That's a 13.2% increase year over year.
Wow. Pretty
impressive, right? And, they're actually on track to blow past their initial revenue projections for the year by a cool $64 million.
That's significant, especially in this economic climate we're in. For a company in the sector, we just don't see that kind of growth very often.
Yeah, it's pretty remarkable. And I think a lot of it has to do with their shift away from like basic call center work, right? Which we've seen, kind of gets squeezed by automation and towards these more specialized services. Yeah. So let's dive into that a little bit. What are we talking about here? When we say specialized services, what exactly makes TaskUs stand out?
So think about things like trust and safety, content moderation, which every online platform these days needs. And that's something that's really seen a huge jump this quarter, like 30.8% revenue growth.
Wow.
Yeah. And they're also killing it in areas like, financial crime compliance, anti-money laundering. These are all fields where you really need that human expertise.
Yeah, that makes sense.
And TaskUs is really, they've made themselves the go-to provider for this kind of stuff.
Right. So it's not just like answering phones and, dealing with basic customer service inquiries. They're really dealing with the complex issues that require specialized knowledge.
Yeah.
It makes sense why those services would be, a bit more resilient to economic downturns and automation in general.
Absolutely. And this trend toward specialized expertise is even playing out within their AI services, which grew by 17.8% this quarter.
Oh, wow. AI services. So you think a company like TaskUs might be worried about, AI taking over their jobs, not offering AI as a service.
Right. You would think. But that's what's so fascinating about them. They're kind of embracing AI. They're even using their own platform, which they call TaskGPT, to boost their own efficiency.
Wow.
But they also see the need for, human oversight, especially in areas like AI safety and development. So they're positioning themselves as experts in this new AI landscape.
That's really interesting. So instead of fearing the AI wave, they're kind of riding it, both internally and as a service to their clients.
Yeah, exactly.
Smart move. But speaking of clients, I'm curious, what did the call reveal about their client base? Are they overly reliant on a few big names, or are they pretty diversified?
It's a good question. So their largest client, and they don't name them in the transcript, but it is a major driver of growth. It represents 23% of their Q3 revenue.
Wow. Nearly a quarter of their revenue from just one client. That does raise some flags about concentration risk.
It does. If that relationship goes south, it could have a big impact.
For sure. So are they making any moves to kind of diversify their client base and mitigate that risk?
They are. They're scoring wins with enterprise clients in healthcare and financial services. And those are, typically sectors that are seen as more stable, a little bit less susceptible to the volatility we've been seeing in tech.
Yeah, that's encouraging. Spreading the risk and tapping into new markets with strong growth potential.
Exactly.
So they've got the specialized services, the strategic client relationships, and they're embracing AI. What's their outlook for the future? Are they expecting this growth to continue?
So they're hinting at another strong year in 2025. They're aiming for continued double-digit growth. They'll share their formal guidance on the next earnings call, but it seems like they're feeling pretty confident.
Well, that's good news for investors.
Yep.
But, high growth often comes at a price. What's the story with their margins? Are they sacrificing profitability to chase this aggressive expansion?
That's where we see the trade-off a little bit. They're prioritizing growth over margin expansion right now. They're pouring money into operations, talent acquisition, building new facilities to support those ambitious plans. And it's putting a little bit of pressure on their margins in the short term.
So it's kind of you got to spend money to make money situation. But are they, walking a tightrope here? Could this focus on growth backfire if the economy, takes a turn for the worse?
Yeah, it's definitely a calculated risk. They're betting that this rapid expansion will ultimately lead to even greater profitability down the road. They're playing the long game.
Okay.
banking on the idea that those investments will create a more robust and resilient business.
I gotcha. So before we dive deeper into the financials, let's have some fun with our This Is Not Financial Advice segment.
Okay, let's get wild.
All right, so inspired by TaskUs' success with their large AI-focused client and just the explosion of generative AI in general, I have a thought-provoking, if slightly outrageous trade idea.
I love a good hypothetical.
Okay, what if we short a basket of companies heavily exposed to traditional call center work, the ones that are, ripe for AI disruption?
Okay.
And then on the flip side, we go long on TaskUs AA, a basket of companies developing or applying generative AI in innovative ways.
So you're betting that TaskUs captures the value as AI reshapes customer service while the traditional players fall behind.
Exactly. It's a high-risk, high-reward move, capitalizing on this seismic shift that AI is bringing to the customer service landscape.
Bold.
Of course, folks, this is purely hypothetical. Do your own research before making any investment decisions. This is not financial advice.
Indeed.
Yeah.
Just food for thought, inspired by our deep dive today.
Exactly.
It'll be interesting to see how this all plays out in the coming months and years. But now let's get back to the numbers and see what else we can glean from TaskUs' financials.
Okay, so let's peel back another layer here and look at what TaskUs financials tell us about their profitability. They reported an adjusted EBITDA of $54.2 million for Q3, which translates to a 21.2% margin.
Okay, now I know not everyone listening is, fluent in finance speak. So for those who aren't, EBITDA is basically a measure of a company's operating profitability.
Exactly.
And 21.2% margin is nothing to sneeze at, but it's actually a bit lower than what they've delivered historically. And they did mention, some margin pressure during the call. What's the story there? What's driving that?
Yeah, it really comes down to their growth strategy. Think about it like building a skyscraper. You need to lay a solid foundation and invest a lot up front to support those ambitions.
Yeah.
So for them, that means, pouring resources into operations, building those new facilities we talked about, attracting top talent. All of that upfront investment is going to impact margins in the short term. So it's kind of a spend money to make money type of situation. But are they walking a tightrope here? Could this focus on growth backfire if the economy, suddenly takes a downturn?
Yeah, it's a calculated risk for sure.
Yeah.
They're betting that this rapid expansion will lead to even greater profitability down the road. They're playing the long game. They're banking on the idea that these investments will ultimately create a more robust and resilient business.
Okay. That makes their cash flow situation even more interesting.
Yeah.
They generated $98.2 million in cash from operations year to date, which is actually a slight dip compared to last year. Is that a cause for concern?
Not necessarily. It's pretty common for companies in a rapid growth phase to see some fluctuations in their cash flow.
Okay.
They're investing heavily in capital expenditures like those new facilities, and that naturally impacts their cash position.
Makes sense. They're building for the future, and that construction takes capital. But let's zoom in a little bit on their different service lines. We already talked about that impressive growth in trust and safety and AI services. What's happening with their core digital customer experience offering? Is that kind of getting overshadowed by these newer, higher growth areas?
Not at all. DCX saw solid growth year over year, 6.3% in Q3. It's actually bounced back nicely from a slight decline earlier in the year.
Oh, wow. So they're back in positive territory, but it's still their slowest growing segment.
Yeah.
Is that a sign that DCX is becoming a legacy offering, something they might phase out as they double down on those specialized areas?
I wouldn't jump to that conclusion just yet. DCX is still a huge revenue driver for TaskUs.
Okay.
And they're seeing some really interesting trends within that segment. For example, they highlighted strong performance from new clients and fintech professional services and health tech, all sectors that are experiencing really rapid growth.
So it's not just about their existing big tech clients anymore. They're attracting new clients from all sorts of industries, which again strengthens that diversification strategy.
Exactly. They're showing that they can adapt and cater to the evolving needs of a wide range of businesses.
I like it. Now, they did mention facing some pricing pressure in the market.
Mm-hmm.
How significant is this, and is it a threat to their profitability?
Yeah, they acknowledge that there's definitely some pricing pressure out there, especially from some of the larger competitors who might be struggling for growth and resorting to undercutting prices to win business.
Okay.
However, they emphasize that they're not feeling that same pressure when it comes to their specialized services. Clients are willing to pay a premium for expertise in areas like AI and content moderation.
Right, where the stakes are higher.
Exactly.
Yeah.
Those are areas where specialized skills are essential.
So their strategic shift towards these higher value services is giving them a little bit of insulation from those pricing wars happening at the lower end of the market.
Yeah, they're playing in a different league now.
Right? It's like that old adage, charge more, deliver more.
Exactly.
They're investing in their people, building that expertise, and then they're able to command higher prices because they're delivering those high-quality specialized services.
It's a classic differentiation strategy, and so far it seems to be working out for them.
Yeah. Now let's zoom out a little bit and look at their geographic footprint. What can you tell us about their global expansion plans?
Okay, so we've covered the financials, the service offerings, client strategy that laser focus on specialized expertise. Now let's talk about their global footprint. Are they mostly a US-based company, or are they, branching out internationally?
Well, that's where things get pretty interesting. They're actually seeing really impressive growth outside of the U.S.
Oh, really?
Yeah. In fact, their U.S. revenue actually declined by 4% year over year.
Wow. So the American dream isn't working out for them so well in this case. What's driving that shift away from the U.S. market? I mean, it's not just about chasing lower labor costs, although that definitely plays a role. They're tapping into a global pool of talent, particularly in regions with a strong reputation for tech skills and multilingual capabilities.
Makes sense.
They want to be able to serve clients with a global presence, operating across different time zones and cultural contexts.
Right. So they're going where the talent is, regardless of geography,
Right.
to meet those, increasingly global needs of their clients.
Exactly.
Smart move.
Yeah.
Now, they specifically highlighted Latin America as a high-growth region. What's making that region such a sweet spot for them?
Well, they've got a strong presence in countries like Colombia and Mexico, which are becoming real outsourcing hotspots.
Yeah.
And these countries offer a really attractive combination, young, educated workforce, competitive labor costs, and importantly, proximity to the U.S. time zone.
Oh, that's key for collaboration.
Huge.
Yeah. So they're getting the best of both worlds, cost effectiveness and operational efficiency.
Yeah. And it sounds like their global ambitions go beyond Latin America. They mentioned some successes in Europe as well, right?
Mm-hmm.
They've been steadily expanding their footprint there, securing new clients, and really establishing themselves as a key player.
So it's like they're playing this global game of chess, strategically positioning themselves in these key regions to capitalize on emerging markets and create a more diversified revenue stream.
It's exactly that. They're not just, hopping on the bandwagon and chasing cheap labor.
Yeah.
They're making calculated moves to establish themselves in regions with strong long-term growth potential.
Right. And in a world where, geopolitical risks and economic uncertainties are kind of on the rise, having that global presence provides a real advantage.
Huge advantage.
It gives them flexibility to navigate those uncertainties.
Yeah.
And, weather storms in one region by leveraging the strengths of another.
For sure.
It's a smart play for any company looking to thrive in today's world.
So as we wrap up our deep dive into TaskUs' Q3 earnings call, what are the key takeaways here for investors? What should they be watching closely in the coming months?
Well, I think the big takeaway is TaskUs is back in the fast lane. They've got double-digit growth, defying the challenges that a lot of their competitors are facing. And they're doing it through a combination of factors. That focus on specialized high-value services, embracing AI as both a tool and an opportunity, and strategically expanding their global footprint.
They're playing offense while others are playing defense. And they're betting on these bold investments to fuel their growth.
Exactly. And while the reliance on that one large client does raise some concerns about concentration risk, they are taking steps to diversify their client base and tap into new markets.
So it's a company with a lot of momentum, a clear vision for the future, but also some potential pitfalls to watch out for.
Yeah, investors will definitely be watching their next earnings call closely for more clarity on their long-term strategy and how they plan to navigate these challenges. Well, this has been a fascinating deep dive. Thanks for breaking it all down for us.
My pleasure.
And all our listeners out there, thanks for joining us for another episode of Talk Tickers. We'll be back soon with another earnings call breakdown. Until then, happy investing.